If you master liquidity, you'll become profitable because it's the only concept you need in trading. And in this video, I'm going to give you a strategy that will honestly change your life. It's changed my life, it's changed these traders' lives, and it's going to change your life too. Okay, so what actually is this strategy? It is my formula that I've essentially created after 5.5 years of trading, which is bias, sweep, entry. I'm telling you, this is all you need to become a consistently profitable trader. So first thing we need for whatever market we trade, and because this will work on every single market, is we need a bias, right? We need a bias, and the easiest and simplest way that I've found to determine bias is to get onto the 4-hour chart and to look for something called liquidity, right? Now, liquidity, if you don't know what it is, I'll put a nice picture on screen now. It's simply stop loss orders. Now, contrary to what you hear, liquidity is actually found on all time frames. However, to find your bias, you want to look for liquidity on the higher time frames, so the 4-hour, daily and weekly chart. But the easiest way is just to get onto the 4-hour chart and ask yourself this almost trivial question, right? Of which major high or low is price most likely to go for at this point right here. Now, this is, to be honest, this is a very difficult example, and I've actually picked this out deliberately because look at this, right? Price is choppy, it's messy. This is very, very disgusting price action. So if you can understand this here in this, horrible bit of price action, when the markets are trending nice and clean like this, I mean, you're going to print money at will, right? So if you can make money in these markets, you can make money in any market. So what you're going to do is ask yourself which major low or high is price likely to go for on the 4-hour chart. And as always, if you're using the indicator, which you should find somewhere in the description, this will plot out the major lows and major highs, right? 4-hour buy side, 4-hour sell side. Now don't let the buy side, sell side matter or throw you off. All it needs is buy stops and sell stops. So, and again, the actual indicator itself will plot out sweeps. So here's your sweep of this high, here's your sweep of this high. This is why it's very difficult, because we're sweeping out multiple highs. There's no real direction there's no really obvious direction of where the markets actually want to go. So what we're going to do is we're just going to look at this bit right here. So we're going to ignore all the sweeps, and we're just going to look at this bit of price action right here. And we're going to say, okay, is price most likely, because I have no idea, no one knows for sure what price is likely to do next. We can just predict with probabilities, right? No one knows for sure, right? Some, news event could happen, anything could happen in these markets. Is price more likely at this point right here to come all the way up and take out this high? Or is it more likely to come down and take out this low here? Now, what it does afterwards, I have no idea. It's very likely, if you're wondering, price is probably going to do something like this. Just come back into the range, chop around, maybe take out this high later on, and then just continue to chop, right? But as day traders, as scalpers, even as swing traders, we can make money riding price down to this major low right here, right? And if you're wondering, oh, Atif, why are we going for this low? No respect of any order block or fair value gap, and price is literally right here. So what does that really mean, right? What does it mean if price wants to come for this low right here? What does that actually mean as traders? It means we have our bias, we have our direction until, this is really important, until price takes out this low. And then what we're going to do is, let's imagine price is now at this point. We're just going to ask ourselves the same question, right? What is price more likely to do? It could go up for this low, or it could shoot off in the opposite direction, but we don't care about that. All we care about is that price is likely to go for this low right here. So we can mark out this low right here, and let's just turn off the indicator. So do you know how I said there's a 3-step process: bias, sweep, entry? We have our bias now, which everyone always botches because this is the hardest part in trading, is we need to get onto our entry time frame and look for our sweep. But your bias is always on the 4-hour chart. You can trade any time frame you like, but you must do your analysis. You must find your bias on the 4-hour chart. So let's get onto lower time frames and look for our entries. Okay, so here we are on the 1-minute chart. Now, this is a very difficult example, and the reason why this is difficult, by the way, is because the 4-hour is also chopping, right? So the 4-hour chopping, the 1 minute's going to be chopping. All time frames are going to be essentially consolidating in one way or another. This is what people mean when they say price is fractal. But what we need to do now that we have our bias, is we can't just randomly look for a fair value gap to sell. We need to wait for a liquidity sweep. And if you don't know what that is, go look at this picture on screen now. It's very hard to spot in price action, right? It's very difficult. It takes a lot of experience and practice actually to understand what a sweep is, but I'll try and make it as simple as possible. So what a liquidity sweep really is, and again, the first thing you need for a sweep to know what a sweep is you need the bias, right? If you don't have a bias, you're just going to be guessing. And, you're going to think, oh, Atif, is this a sweep here or is it this? You're going to be guessing. You need to have your bias. And if you remember on the 4-hour chart, we said we were bearish and we were targeting this low here, right? This is the low we're going to target. Or at least we know price is likely to go for this low here. We don't need to target it. All we need is a 3 to 1 in that direction to make money, or whatever, you know, take profit you like. So this is where it gets quite difficult. So can you see this wick here? Can you see this candlestick? This huge candlestick, and it's got a massive wick. Now this right here, look at the bottom right. Look at the bottom right here. So this right here is 8. Can you see how it's 8:30 a.m. New York time? So wherever you live, make sure you've got New York time. 8:30 a.m. is when all the news announcements come out for Forex and futures, right? So this works on every market. So pay attention to what I'm about to say here. Whenever there's a news event, doesn't matter what it is, even if it's like CPI or FOMC, but for any news event, it's always a liquidity sweep, right? 9 times out of 10, it's a liquidity sweep. The only exception to that is when you get a massive like CPI candle where it just goes straight up, right? But most news events, it's always a liquidity sweep, right? And I'll put on the picture again, just so you can see it, right? So, you know, try and digest what that image looks like. But what it really is remember, we're bearish. So that's the most important thing, is when we're bearish, it's a fake move that takes out stop loss orders, quickly shoots off in the opposite direction, and then you get your retracement and ride price off. Right, now the retracement isn't the sweep. The sweep is the fake move, right? The fake move that comes up just to take out stop loss orders, right? So 8:30 a.m. news event, almost always is it a liquidity sweep. Price goes up in the opposite direction, get your retracement, ride price down. That is a universal concept in all markets. Whenever there's a news event, and if you're wondering, by the way, this same principle applies at 9:30 a.m. open. You know, for futures open, for indices, fake move, liquidity sweep, price shoots off in the opposite direction, the real direction, and then you get your entry. So we zoom out, what's really been swept? We've swept this major high here, we swept this high here, which is almost London's high, and then we've got London's high, which is basically around this level. So what we can really say is around this level here, is lots of liquidity. There's lots of stop loss orders. We've got London's high, even Asia's high over here. We've got this like almost pre-market. I don't want to say pre-market, but you get the point. Like early New York high, and then right here, look at this. This is the news event. Here's the candle right here, the 8:30 news event. Bam! Instantly smashes through, takes out anyone who has their stops, and then price quickly shoots off in the opposite direction. Now the easiest way to know that it's a sweep is to wait for a fair value gap to form in the opposite direction. Now when I say opposite direction, I really mean the bias direction, the overall bias, because you remember, this is where price actually wants to go, right? It doesn't actually want to come up here. This is why it's a sweep, it's a fake move, because price doesn't want to come up here, right? Price wants to get quickly down to this low, right? That's what smart money want. However, this is manipulation, right? Allowing smart money, and especially their algorithms that trade the 1 minute chart, to take liquidity, quickly come in, right? So fair value gap, by the way, if you're wondering, Atif, because a guy was asking me this, why does it work? It's essentially a mathematical way. And I say mathematical way as in like a way you can program. You can imagine a trading bot, right? If liquidity sweep and fair value gap, enter on fair value gap, play stop here, target free risk to reward ratio. Now, I don't know much about computer science. I have a maths degree. You can, if you know about coding, you can probably imagine very simple to code, right? If you're a hedge fund and you've got billions and stuff. So anyway, once you've got a fair value gap that forms in the opposite direction, and just for those who are wondering, just because like a trading bot trades it, doesn't mean that you can't trade it. Especially, you know, if it's on the 1 minute chart, which isn't like crazy, right? Obviously, don't trade the second charts. But the 1 minute chart you can definitely trade. So fair value gap forms in the opposite direction. That right there is like it's smart money screaming at themselves, at other smart money traders, that hey, look, now's the time to get in, right? Fair value gap confirmation, what it really means is that price quickly wants to get to somewhere. Now you know that somewhere is that liquidity all the way down here. So enter on the fair value gap, stop fixed at the liquidity sweep high, always fixed here. So if you want a better entry, take the order block instead, or whatever you want, right? But always fixed, stop always fixed at the high, right? Now your entry, you don't have to use the fair value gap, full transparency, you don't need the fair value gap. I think it's just an easy pattern. If you want order blocks, if you want inversion fair value gaps, whatever you like, you know, indicator, EMA, whatever you like, by all means use it, but stop always fixed at the high right here. So if we zoom out, if you're gonna take profit, you're gonna target at least, in my opinion, I would target a 3 to 1. You can target this liquidity here if you want, like basically a 2 to 1. But for me, I'm going to target 3 to 1. I get my money and I get out. I do not target all the way down here because it's very likely that price can reverse. Now, if you want to be a day trader or scalper, you can zoom out. And you see this here, this right here. Let me mark this out for you. This is liquidity. It's also London's low, which is really beautiful price action. Whenever you're trading New York session and you have a sweep of London's high, you want to target London's low. That's the most you want to target, by the way. So let me just make this out. Liquidity, which is London. Let's get rid of this. London's high, right? Now, whenever it's a key session, there will be there's much more liquidity here than there is at this low right here. Right, hopefully that makes sense. This is London's low. Lots of liquidity. I said high. Why have I put high? Liquidity. London's low. Right? So what you're going to do is simply target this, right? And this is the most that you want to target in price action. You do not want to target more than that because you'll be punished and the markets can quickly reverse, right? Like I always say, get your money and get out. And if you want to learn more about liquidity, go check out this video on screen now. And if you want a full in-depth breakdown where I go into crazy depth about what you need to become a consistently profitable trader, and I explain the buyer sweep entry approach in way more detail, go check out this free private training that I've made exclusively for you in the pinned comment down below.